Hi, I'm Federico, and this is the video of the Getting Started guide in which we are gonna enter income and financial expenses. So to do so, let's go to cash balances. And we're gonna use these two actions, new financial expense and new financial income. Let's start with new financial income, which is the less common. And let's say we've got here a savings account, and let's say they pay us some interest, which I'm sure is a miserable amount. So let's say 15, and then we close this window, save and close this window, and my savings account balance goes up by 15. Now let's do a financial expense, and we're going to say that this is with the credit card. And the credit card, well, no doubt, charges interest. Let's say this is 70. Save and close this window. And then let's do another one, also with the credit card. And they say that they're going to charge us fees as well, of course. So, save and close. So what we've just done with these two actions and the small forms is like a shortcut to enter income and expense transactions, like a way to make it like faster and easier. Let's go and look at those transactions, because I could have entered them here. So here, have a look. This is the one we've created. We put the bank as a customer so we can enter an income transaction. We put interest as the item. Interest is the item here in the transaction, and savings account is where the payment, where we receive the payment on this account, which in this case is the interest. Let's go back to the expenses and see the transactions. So this one, the supplier is the bank, the item is interest, and the payment is the Visa card, because basically this increases the balance on my card, and then I'll have to pay it. It's almost as if I had bought something, charged something on my card for 70. And let's look at the other one quickly. So it's basically the same. The only difference is that the item here is fees, right? Okay, now let's go to home. Let's look at the income and expense statement, because this is where we're having an impact. Now we have other expenses for 120 and other income for 50, which is the result of what we just did. So let's click here on other expenses to see our profit report, and it's like expense, this fees and interest. So it tells me 120, 50 on fees, 70 on interest. I can click here to spend other income as well. So let's collapse them and take a look at the whole thing. So this is our income, income statement or profit report from all we've done. Like we've done sales, we have cost of sales, we have gross profit, expenses, operating profit, and then we have other income and other expense from the financial transactions, the financial income and expense we just did, and then we get a net profit. This section is for all non-operating income and expense, but the operating income, and especially of the non-operating expense that we cannot get rid of, is usually financial expenses. Most business, it's very hard to operate without bank services. A lot of businesses have like loans and all sorts of things that generate this type of expenses. It's important to account them properly, to make sure we're keeping track of them, and to see the impact they're having on the net profit. Because unfortunately, if we are not careful and keep an eye on this, they might become too large, and we could easily end up, working for the benefit of the bank, and with very little left for us.